Welcome back to my channel. My name is Elias, and in today's video we're going to be talking about private mortgage insurance. Now, if you're in the real estate business like I am, or if you're a home buyer, in your closing disclosure, when you purchase a house or you refinance a house, you may have or have not seen private mortgage insurance. To abbreviate it throughout this video, we might refer to PMI throughout this whole video, okay? So I'm going to teach you how to save money on private mortgage insurance, how to get rid of it without having to pay extra money, okay? There's a little known secret way for you to get rid of it that I'm going to teach you guys. I just recently learned about it and I'm excited to share it with you. And for those of you who work in real estate, man, you should know this, okay? You should, if you don't know this, that's why you should be watching this video. If you're a new subscriber, comment below that you just subscribed to my channel and smash that bell so you're notified whenever I post a video, and don't forget to smash that like button as well. Most importantly, subscribe. And if you're a new subscriber, comment below that you just subscribed. All right, new homeowners, sometimes when you're purchasing a house, you don't have a lot of money to put down on it. So here's how private mortgage insurance, here's what private mortgage insurance is. Private mortgage insurance is an insurance your lender makes you pay in order to protect their behinds in case you fail to pay. So honestly, it's kind of ironic because most of the time when we purchase insurance, we're buying it for ourselves and we pay it ourselves. But in this case, somehow it's totally fine for your lender to make you pay for an insurance to cover them. Like, if you're gonna, like, honestly, if you're going to have somebody purchase insurance, it should be yourself. Like, if you're trying to protect yourself, you purchase insurance for yourself. I digress. Let me continue. But yeah, that's what private mortgage insurance is. You're usually required to get private mortgage insurance when you don't put more than 20% down. If you're as a down payment on the house. So if you put less than 20% down, your lender usually requires you to purchase private mortgage insurance. There's a few ways for you to get rid of private mortgage insurance. I'm going to cover first the most common ways, but at the end of this video, I'm going to give you the secret sauce of how you can practically pay zero money to have that private mortgage insurance removed. Because let me tell you, private mortgage insurance costs you a whole lot of freaking money. Okay? So let's touch base on the first way that you can get rid of private mortgage insurance. So guys, here's the first way. The first way you can get rid of private mortgage insurance is for you to have at least 80% ownership of the house on the loan. So you have to have a loan to debt ratio of 80 to 20. So you have to own at least 20% into the house. So let's say you have a house that I'm going to simplify it here. Let's say you have a house that you purchased for $100,000 and you put $15,000 down. So in this case, you put 15% down, therefore you are below that 20% threshold of where you don't have to pay private mortgage insurance. In order for you to get rid of the private mortgage insurance, what you can do is throughout your payments, now that you have purchased the house or whatever, you purchase the house, throughout this period that you're paying, once you have paid down $5,000 into your principal, to which you now own 20% of that loan, where you pay down 20% of that loan, you can request for your lender to remove your private mortgage insurance. Now, you just have to remember one thing. A lot of times, your lender will ask you to call them to remove your private mortgage insurance, because if you don't, you're going to continue paying your private mortgage insurance for a certain period of time, and eventually they will remove it. But if you're trying to get rid of it faster, you have to call your lender. If you don't call, when you sign the documents when you purchase, or sometimes it's on the purchase, but get in contact with your lender, because they'll have you call within a certain period of time. If you don't call them within that certain period of time, they're going to continue. You're going to continue to have to pay private mortgage insurance. So yeah, that's one way. By paying down your principal, eventually, where you own 20% of the loan, you can get rid of the private mortgage insurance by calling your lender. The second way that you can get rid of private mortgage insurance is for you to have an appraisal done of your property. And if your appraisal, once the appraisal is complete, if they determine that your property value went up in the value, if your property value went up and now you've beat that threshold of owning 20% of the house, you're golden. If your property, you should, like, the only issue with that is that you do have to pay like $500 and whatever to have an appraisal done of your property. So you take that with a grain of salt. You just have to do it depends also. You can also get some appraisals done for cheaper, but that's just a rough estimate. So you just have to do the calculation there and see the cost to benefit ratio for yourself. Is it worth getting rid of the PMI over a year, 2 years? If you do the appraisal, if to you it's worth it, then by all means, get it done if you're saving money. Now, the third and the secret way for you to get rid of private mortgage insurance is by a BPO. Is it a BPO? I'm not sure if it's a BPO or BOP. I think it's a BPO. Let's go with BPO. So it's like a BPO. It stands for brokers. I think it's like personal, whatever, yada. Just get in touch with your bank and look, see if your bank allows you to do a BPO of your property. So what a BPO is when a broker, a real estate agent, who is authorized to do this, of course, get in touch with your bank, they do their personal opinion. I think it's broker's personal opinion. Yeah, BPO. Sorry. So it's when the broker has his personal opinion of what your house's market value is. So the broker who works in that area will compare. They'll come to your house to do an evaluation. They're going to take pictures. They'll look around. If you had a recent remodel to your house done, that's even better, because now your house value just went up because of that remodel you just did. So the broker will come into your house, take pictures, and he'll do an evaluation. He'll compare your house to the surrounding houses, because he's a broker, he works in the area, he understands your market. And if your broker, once he sends out that information to your lender, determines that your house's market value went up, it's basically like doing an appraisal. You can also have your private mortgage insurance removed in that way. And that way costs way less most of the time. So get in touch with your lender and have a broker's personal opinion done on your property. I think it's a broker's personal opinion. Don't quote me and don't sue me on that, bro. I'm just a random guy on YouTube. So just contact your lender and see if you can get that done. If you're a new subscriber, comment below that you just subscribed to my channel and smash that bell so you're notified whenever I post a video, and don't forget to smash that like button as well. Most importantly, subscribe. And if you're a new subscriber, comment below that you just subscribed. Alright, this is your boy Elias.